Magellan Midstream Partners is a large midstream oil partnership that owns pipeline and storage assets. Roughly 85% of its revenue is driven by fees, which means it's getting paid for the use of its assets. The price of the oil and other commodities that Magellan handles aren't the driving force, demand is. So the partnership's business tends to be pretty stable. Image source: Getty Images. For example, while oil majors were struggling to maintain their dividends or were forced to cut them during the oil downturn that started in mid-2014, Magellan increased its distribution each quarter through the worst of the downturn. It has now upped the disbursement for 62 consecutive quarters at an annualized rate of 12%, 4 times the historical rate of inflation growth. Many of these projects are being built with customers already signed up, ensuring they will add to the top and bottom lines. When a customer isn't waiting in the wings, the spending only takes place if Magellan believes demand warrants the investment, increasing the size of an existing pipeline, for example, or if the spending will add value to its business, like increasing the number of tankers a port facility can service simultaneously. Magellan has invested $5 billion in growth projects and, to a smaller extent, acquisitions over the past decade, with an impressive track record of success. MMP Financial Debt to EBITDA, TTM. Data by Y charts. The only problem with Magellan is that its partnership structure doesn't play well with tax-advantaged retirement accounts like IRAs. That is why you might want to look at ONEOK, which yields around 5.8%. This midstream player gets roughly 90% of its revenue from the fees it charges for the use of its pipelines, storage, and processing assets. The one problem here is the company's leverage. Debt to EBITDA is a little over 5 times. That's not horrible, but it is higher than management would like. So it's going to work toward trimming that into the 4 times range, which is down near Magellan. But it isn't planning on sacrificing dividend growth to get there. A quick overview of ONEOK. Image source: ONEOK, Incorporated. ONEOK's dividend has climbed every year for 15 years and counting. The goal over the next few years is to increase the dividend around 10% a year. That said, there are going to be a lot of moving parts, so you'll want to keep a close eye on how well management achieves its targets. If you're looking for a decent yield and distribution growth to help power you through retirement, then Magellan and ONEOK are 2 midstream players you should consider buying. One is a good fit for a tax-advantaged retirement account, while the other would play nicely in a regular taxable brokerage account. But either will give you a 5% yield backed by a long history of rewarding investors. It's time for a deep dive if you are retired and looking to supplement your Social Security checks. More from the Motley Fool. Ruben Greg Brewer has no position in any of the stocks mentioned. The Motley Fool owns shares of and recommends ONEOK. The Motley Fool recommends Magellan Midstream Partners. The Motley Fool has a disclosure policy.